Hi, welcome back to our series on videos of some little things that can help us make trading decisions. If you like this kind of video, please make sure to subscribe, like, comment, and share. We'd really appreciate your feedback. Today, we're going to be introducing Grayscale products. You may be able to trade Grayscale products alongside actual cryptocurrencies and increase your chances of enhancing your trading returns. Now let's get started. Grayscale is an investment manager that manages a few unit trusts that issue units that are backed by cryptocurrencies. Some of the major Grayscale trust products that are out there is the Grayscale Bitcoin Trust, the Grayscale Ethereum Trust, and though significantly smaller in size, the Grayscale Litecoin Trust. If you take a look at the AUM, these are very, very big at this point, with the Grayscale Bitcoin Trust, or GBTC, having about an AUM of $32 billion. The Grayscale Ethereum Trust, or ETHE, having an AUM just around $5 billion. And the Litecoin Investment Trust, or LTCN, having an AUM around $250 million. These Grayscale investment trusts have some very unique subscription and redemption mechanics that make them quite unique from other, from regular, say, exchange traded funds. A couple of things to take note is that while these trusts do trade in the secondary market, if you were to directly subscribe for these trusts with Grayscale, you would need to take those subscribed shares and hold them in a lockup for anywhere between 6 months for GBTC and 1 year for the Ethereum or Litecoin Trust before they become unrestricted and are eligible to be sold in the secondary market. That secondary market is the pink sheets, is what you see, the volume and the prices that you see every day if you look it up in, say, Yahoo Finance or Google Finance or anywhere else. As important, redemptions of shares are currently not authorized, which means that if you were to buy these in the open market and go to Grayscale and try to redeem it for either cash or in kind, they would not process this for you. This will beg the question, do these trusts actually trade quite close or similar to the net asset value? And based on these two things, I would expect that, or it's expected and known, that it would trade quite divergently at times from the net asset value per share. So let's take a look. Does GBTC trade at a premium or discount? Well, back in late February, as recent as late February, the GBTC did trade at a premium to its net asset value per share, and I'll just call this the NAV. However, when we get to about the 25th or the 26th, the GBTC premium discount fell almost as much as a 10% discount to the NAV. And then we can see on the 28th, it's traded about 5% over the NAV. And finally, for the past couple of days, it's settled maybe right around the NAV, that ratio being 1. Similarly, we can take a look at the ETHE premium or discount to the NAV. We can see here, again, on the 22nd, it was trading at about a 10% premium to the NAV. However, due to selling pressure from some holders, this premium swung by the 25th and the 26th to a discount to the net asset value before again bouncing to 10% premium to the NAV. And finally, again, like GBTC, settling, in this case, a little bit higher than the net asset value per share. We'll next look at Litecoin Trust because this trades at a significant premium to the NAV and have a small discussion about that. When we look at the NAV of the Litecoin, I didn't even bother making a graph because the fund percent premium is around 1700% or 17 times its NAV. And that is a crazy premium that it would be trading in. And why this has actually occurred is that there is still quite a bit of demand, but not a lot of supply for shares. So one thing we can look at to see whether this premium can actually last over time is to look at the pipeline of shares that are actually going to be coming out that are eligible to be sold. So we'll look at a table here of how many shares currently are being available to be sold right now in the market. And the current float of that is about this figure here below this blue line. It's around 181,000 shares. It's actually not a lot. However, what we're going to see is that the number of outstanding shares is going to increase by a very large multiple by this time next year. So you're going to have about 100, or maybe roughly around 200,000 shares being eligible to be sold right around now, is going to move to basically roughly 16 million shares about a year from now. And it'll be increasing significantly, even to a factor of 10 times this figure by the summer. So I highly doubt that this premium will be able to last in LTCN. In a later video, we'll actually discuss how we can take advantage of this volatility of the NAV spread to help you trade strategically and enhance your returns while you stay long some Bitcoin, Ethereum, or Litecoin. Well, thank you for watching this video with us, and I hope you return, and we hope to go over some more interesting topics at a later time. Okay, thank you.